Last week, the U.S. yield curve inverted, meaning that the yield on 2-year government bonds rose above the yield on 10-year government bonds. When the yield curve inverts, recessions typically follow. This video discusses the outlook for wealth, credit growth, and the economy during the rest of 2022, in light of the Fed's intention to tighten monetary policy aggressively during the months ahead. It finds that there are many reasons to worry that the warning signal being sent by the inverted yield curve is correct. It is very possible that the U.S. will fall back into a recession later this year. Recall that credit growth had been the main driver of economic growth during the decades leading up to the crisis of 2008, and that during the years since 2008, when credit growth was weak, the Fed used ultra-low interest rates and quantitative easing to drive up asset prices in order to create a wealth effect that would boost consumption and supplement credit growth to keep the economy out of recession. Since 2008, total credit, which is equal to total debt, has increased by 60% to $88 trillion. And household wealth has increased by $80 trillion, or by 114% since its pre-crisis peak in 2007, to $150 trillion at the end of last year. The surge in credit and wealth in recent decades occurred thanks to a very low interest rate environment. Interest rates were low because inflation was low, and inflation was low due to the disinflationary impact of globalization.